the 26 chart patterns ratings. So every chart pattern is rated accordingly. And you can get a high probability chart pattern, medium probability chart pattern, and a low probability chart pattern. We are going to rate them out of 4. So 4 out of 4 is a very high probability chart pattern. 2 out of 4 is medium to low probability, and 1 out of 4, well, it's a bit dangerous to take that trade. That looks good. So as you can see that there are certain chart patterns that we use when we are trading and looking for trading setups. Right, so with the ascending triangle, there is a horizontal resistance, a diagonal run-up uptrend, and we are looking for 4 main points for ratings. 1, was there a prior uptrend? So we want an uptrend, then an ascending triangle, and then we want to break to the upside. Correct. So that's step 1. Step 2, were there more than 20 candles that made the formation? Any less than 20 candles and the formation will be very constricted, and there wouldn't have been a big fight between the bulls and the bears, and so it could be leading to more of a consolidation and sideways motion. The third criteria is that there has to be 3 touches on the resistance and the support. So you can see here 1, 2, 3, 4, 5, 6, 7. Here 1, 2, 3, 4, 5, 6, 7. Perfect. And then finally, with the new element, is that price has to be above both the 20-day moving average and the 200-day moving average. That makes it a 4 out of 4 ascending triangle, good to go. Okay? So now that you understand the criteria, we can move to the next chart pattern. The broadening bottom, okay, or what I call the vuvuzela formation. Was there a prior uptrend? So you can see here was a prior uptrend. Are there more than 20 candles? Yes. Are there more than 3 touches? Yes. And is price above 20 moving average and 200-day moving average? This occurs for daily charts, weekly charts, monthly charts, 5-minute charts, 30-minute charts, all of them. This is the criteria that you must use to spot a very high probability chart pattern. And if you don't know if a chart pattern is a high probability, send it to me in the Discord under chat, okay, whether it's local JC stocks or on premium or supreme, whatever you're at, send it to me, your screenshot, and say, what do you think of this chart pattern? I will give you the rating, I'll tell you my thoughts and analysis, and then you can also start building an acumen around chart patterns, okay? So that's a broadening bottom. Then we have a cup and handle. Is there a prior uptrend? Are there more than 20 candles? And how round is the formation? So we don't really want a V-shaped formation because there's too much volatility, too much jumpiness that we don't want, okay? And then finally is the price above the 20-day moving average and the 200-day moving average. Diamond pattern, a little less common. It's quite rare, but it does happen. So was there a prior uptrend? Are there more than 40 candles? Because remember, there's half a diamond formation that forms here and half a diamond formation that forms here. How symmetrical is it? So if you see the diamond formation is a bit diagonal, it is probably less likely to work out. So how symmetrical is the diamond formation? And then is price above 20 and 200? Then we have the double bottom or the W formation. Okay. 1, is there a prior uptrend? 2, more than 20 candles. 3, how round is it? So any formation that has roundingness to it, make sure that it is aesthetically pleasing and less V-shape. And then is price above 20-day and 200-day moving average. Easy, getting it? I'm going to carry on as much as you can guess what the rest are, because this reinforces it. So when you put it down, and when I send you the chart patterns ratings, you can glue it to your notebook that you use for Supreme or for Premium, and you can stick it on your book, okay, and you can use it and look for ratings when you do the formations and the setups. Then we have the falling flag. The falling flag, is there a prior uptrend or a flagpole? Yes, there is. Is it more than 20 candles? Were there more than 3 touches on the support and resistance? 1, 2, 3, 4. 1, 2, 3, 4, 5. Yes, it was 4 out of 4. Okay. Falling pennant. Is there a prior uptrend? More than 20 candles? 3 touches on the resistance and support? Yes. And is price above 20-day moving average and 200-day moving average? You got to see. Inverse head and shoulders. So there's the first shoulder, there's the head, there's the right shoulder. Remember, this is all in the MultiTrader System program that explains all of the patterns as well as the book. So if you are a Supreme member, you get this book for free. Go into any of your emails and you will see that link saying complete chart patterns and candlesticks guide. Go into it, read through it, and then come back to this ratings. If you are a premium member, when you get this spreadsheet, you can click on it and you can buy it online. Okay, it's very cheap, extremely cheap. So now we've done the inverse head and shoulders. Prior uptrend, we need a prior uptrend. Are there more than 20 candles? And how round is the pattern, as well as is price above the 20-day moving average and 200-day moving average? The rectangle bull, so you can see it's made a rectangle or a box formation. Has there been a prior uptrend? Are there more than 20 candles? Are there more than 3 touches on the resistance and support? Is price above the 20-day moving average and 200-day moving average? The reverse cup and handle. So this is a cup and handle that is reversed. So the handle is on the left side, the cup is on the right side. If it made another handle, it would have made an inverse head and shoulders. All right, but we got to make use of what we see with these patterns. So 1, was there a prior uptrend? More than 20 candles. How round is the formation? Is price above 20 and 200-day moving average? Then we have a rounding bottom where there isn't a handle or a small rounding bottom. It's just a rounding bottom that formed. Was there a prior uptrend? 20 candles. How round is it? Symmetrical triangle. Prior uptrend, you can see 20 candles, 3 touches on the resistance and support. The other thing is, how symmetrical is that triangle? So it does need to be symmetrical. Is price above the 20-day moving average and the 200-day moving average? And triple bottom, prior uptrend, more than 20 candles, round, prices above 20-day moving average and 200-day moving average. With these patterns, and these patterns are the bearish ones. And you'll see they are pretty much identical, except that the price has to be below the 20-day moving average and the 200-day moving average. But other than that, you can see round, symmetrical, plus 20 candles, plus 40 candles, prior downtrend, pretty much identical. The only thing with the W formation or the double bottom and the M formation or the double top is that there are 3 types. There is, for the W formation, there is a simple formation where the rounding bottoms are quite close to each other in terms of the support. The short form is that the second rounding bottom just did not make the bottom of the previous one and even made it higher, which gives it a better probability. Now, what makes it the difference between a W formation and a cup and handle? The W formation second rounding bottom extends more than 50% of the distance between the high and the low. The cup and handle is less than or equal to 50% of the height. Okay? Only difference. And then extended is where the second rounding bottom went below the first rounding bottom's support. Then we have the M formation. Simple is very similar resistance between the first rounding top and the second rounding top. Short form, the second rounding top is lower than the first rounding top, which means that it really wants to come down. And then extended is the opposite, where the second rounding top's resistance is higher than the first rounding top's resistance. Okay, so those are the 3 types that you're going to get. How is that